Hey, welcome back to Hedge and Haven, your ultimate destination for unlocking the secrets of the ultra-wealthy. If you're into hedge funds, offshore banking, luxury real estate, private jets, or just curious about how the 1% build their empires, you're in the right place. Today, we're diving headfirst into the biggest financial drama of 2025, the explosive tariff war between Donald Trump and Xi Jinping that's shaking the entire world. Picture this: skyrocketing luxury prices, stock markets crashing, supply chains grinding to a halt, and a global economy teetering on the edge of collapse. But this isn't just about trade. It's a high-stakes clash of power, ego, and who gets to rule the financial world. And here's the kicker: it's hitting your wallet, whether you're an investor in New York, an entrepreneur in London, a finance enthusiast in Toronto, or dreaming of that billionaire lifestyle in Berlin. Why should you care? Because Trump's jaw-dropping 245% tariffs and China's fierce 300% retaliation are rewriting the rules of wealth. Some billionaires are raking in profits, while others are losing fortunes. Luxury goods are getting pricier. Real estate markets are wobbling, and hedge funds are making bold moves to cash in on the chaos. In this video, we're breaking it all down: what's happening, who's winning, who's losing, and, most importantly, how you can protect and grow your wealth in this madness. Stick around till the end for 3 actionable strategies to stay ahead, no matter where you are: USA, UK, Canada, or Germany. Grab a coffee because this is going to be a wild ride. Let's jump in. It's April 2025, and the world is glued to a trade war unlike anything we've seen before. Donald Trump, back in the White House for his second term, has dropped a bombshell that sent shockwaves through global markets. He's slapped a staggering 245% tariff on all Chinese goods entering the US. Let that sink in: 245%. A $100 product from China now costs $345 to import, making it nearly impossible for businesses to bring in Chinese goods. This is the highest tariff rate in modern history, and it's not just a policy move. It's a declaration of economic war. Trump's reasoning: he claims China has been looting the American economy for decades, exploiting trade imbalances and stealing jobs. On April 9, 2025, he took to Truth Social, posting, "China has shown a lack of respect for global markets." That's classic Trump: bold, brash, and ready to throw down the gauntlet. His goal is clear: force companies to move their factories back to the US, create millions of jobs, and revive industries like steel, tech, and manufacturing. In 2024, the US-China goods trade was worth a massive $650 billion. Trump's betting that by making Chinese imports insanely expensive, he can redirect that money to American businesses, boosting the economy and cementing his legacy as the guy who brought manufacturing home. Sounds like a plan, right? But here's the problem: this move is causing absolute chaos. Global supply chains are stalling, ports are backed up with cargo, and the cost of everyday goods, everything from smartphones to sneakers, is shooting through the roof. For Hedge and Haven viewers, this hits close to home, especially if you're into luxury. Those high-end goods you love, designer handbags, watches, electronics, are about to get way pricier. Take a designer handbag from China that cost $2,000 last year. With these tariffs, it could jump to $2,800 by summer 2025. That's a 40% price hike just because of Trump's policy. And it's not just about shopping sprees. If you're an investor, you're probably feeling the heat. The stock market took a brutal hit after Trump's tariff announcement, with a 10% drop between April 7th and 9th, 2025. Trillions of dollars vanished from global markets in just 48 hours. If you've got money in companies that rely on Chinese imports, think Apple, Tesla, or even fashion brands like Nike, you're likely sweating right now. Your portfolio might be taking a beating as these companies scramble to adjust. But here's where it gets interesting: some players in the game are actually thriving in this chaos. Hedge funds, the darlings of Hedge and Haven, are making bold bets on US-based industries like manufacturing, steel, and energy. Some are already seeing 20 to 30% returns, in Q1 2025, cashing in on Trump's Made in America push. These are the moves that separate the ultra-wealthy from the rest, and we're going to dive deep into how they're doing it. Later in the video, I'll share how you can think like a hedge fund manager, even if you're not a billionaire yet. But Trump's not the only one swinging in this fight. Xi Jinping, China's president, is hitting back with a vengeance. On April 11th, 2025, he unleashed a staggering 300% tariff on U.S. goods entering China. That means a $50 American product now costs $200 to import into China. This isn't just a response, it's a full-on counterattack, and it's escalating this trade war into a global crisis. Xi's message was loud and clear. China is not afraid. Chinese state media went into overdrive, digging up a 1953 speech by Mao Zedong, where he declared, "We will never yield." That clip went viral on platforms like Weibo, with 70% of posts cheering Xi's tough stance. The Chinese public is rallying behind him, seeing this as a fight against American bullying. Why is China going so hard? Because Trump's 245% tariffs are a direct threat to their economy. The U.S. is China's biggest export market, accounting for 17% of their total exports in 2024. With these tariffs, that market's essentially gone. Experts predict that U.S.-China trade, once worth $650 billion, could plummet by 90% by the end of 2025. That's hundreds of billions in losses for Chinese companies, from tech giants to luxury manufacturers. Xi knows he can't let this slide, so he's pulling out all the stops to protect China's interests. China's not just fighting with tariffs. They're playing a much sneakier game. They've slashed exports of rare earth minerals to the U.S. by 60%. These minerals are critical for everything from smartphones to electric car batteries to military equipment like missiles. The U.S. relies on China for 80% of its rare earth supply, so this move is a gut punch to American tech and defense industries. Picture this: your next iPhone delayed, electric car production stalled, or even defense projects put on hold because the U.S. can't get the materials it needs. That's the kind of leverage Xi's wielding, and it's sending shockwaves through Washington. But wait, there's more. China holds $761 billion in U.S. Treasury bonds. If they decide to start selling those bonds, it could crash the U.S. bond market, send interest rates soaring, and trigger a financial crisis. Experts call this the nuclear option, and while Xi's holding off for now, the threat looms large. Every investor from Wall Street to Hedge and Haven viewers is watching this closely, because a bond sell-off could mean higher mortgage rates, pricier loans, and a tougher road to that luxury lifestyle. This tariff war isn't just a U.S.-China showdown, it's dragging the entire world into the mess. Countries are being forced to pick sides, and the global stage is looking like a battlefield. China's wasting no time building its own economic bloc. Between April 14th and 18th, 2025, they signed massive trade deals with Vietnam, Malaysia, and Cambodia to make up for the lost U.S. market. Their goal? Boost trade with Vietnam alone to $150 billion by 2030. That's China saying, "We don't need America, we've got our own team." Russia and Iran are jumping in too, offering trade agreements and diplomatic support. It's starting to feel like a new Cold War, with economic alliances forming and battle lines drawn. Meanwhile, the U.S. is trying to rally its allies, but it's not going as planned. Trump's tariffs aren't just hitting China, they're also slapping a 10% tax on goods from the European Union. Europe's furious, and they're not sitting quietly. They've restarted trade talks with China to offset their losses, and the data shows the damage. European exports to the U.S. could drop by 15% in 2025, costing billions. India and Japan are caught in a tricky spot. They're holding trade talks with the U.S., hoping to secure better deals, but they're hesitant to fully align against China. Why? Because China's a massive market, and they don't want to face Xi's wrath. It's a diplomatic tightrope, and no one's sure who'll fall first. For Hedge and Haven viewers, this global chaos means one thing: uncertainty. If you're investing in international real estate or offshore accounts, these shifting alliances could shake your plans. European luxury properties, for example, might see a 10 to 15% price drop as investors pull back, creating opportunities for savvy buyers. But Asian markets like Singapore and Hong Kong could boom as China redirects its wealth. Hedge funds are already moving, with some pouring cash into Southeast Asian markets, expecting 12% growth in 2025. The ultra-wealthy always find a way to profit in chaos, and we're going to show you how to follow their lead. Let's zoom in on what this tariff war means for the hedge and haven lifestyle: luxury goods, real estate, and high-stakes investments. First up, luxury goods are taking a massive hit. Trump's 245% tariffs mean anything imported from China, designer clothes, high-end watches, tech gadgets, is getting 30 to 40% pricier. Let's break it down. An iPhone that cost $799 last year could hit $1,142 by mid-2025. That Hermes bag you've been eyeing, it could jump from $5,000 to $7,000. This isn't just inflation, it's tariffs making imports borderline unaffordable. For our audience in the USA, UK, Canada, and Germany, this means your dream purchases, those symbols of success, are slipping further out of reach. Imagine walking into a boutique in London or New York and seeing price tags that make your jaw drop. That's the reality we're facing, and it's hitting aspirational buyers the hardest. Real estate's feeling the heat too. China's property market, already in a crisis with ghost cities and defaulting developers, is under even more pressure as their economy takes a hit from this trade war. In the US, luxury real estate investments are slowing by 15% as investors worry about tariff-driven volatility. If you're eyeing that penthouse in Manhattan or a villa in Mayfair, you might find some deals, but you'll need to act fast before prices rebound. On the flip side, domestic U.S. properties, especially in manufacturing hubs like Texas and Ohio, are seeing a 10% price spike. Why? Investors are betting on Trump's Made in America push, which is driving demand for properties near new factories and industrial zones. If you're in the market for real estate, this could be your chance to snag a deal in Europe or a high-growth property in the U.S., depending on your risk appetite. Hedge funds are where the real action's happening, and it's no surprise why Hedge and Haven loves talking about them. Some funds are absolutely crushing it right now, betting on U.S.-based industries like steel, energy, and manufacturing. These funds are seeing 20 to 30% returns in Q1 2025, riding the wave of Trump's tariff policies. Take energy, for example. With tariffs boosting domestic production, U.S. oil and gas companies are thriving, and hedge funds are pouring billions into them. But it's not all rosy. Funds tied to Chinese imports or global supply chains are bleeding cash, with some reporting 15% losses this quarter. This is where the ultra-wealthy shine. They pivot fast, ditching losing bets and doubling down on winners. Later, I'll share how you can adopt their mindset, even if you're not managing a billion-dollar fund. This tariff war isn't just about economics. It's personal, and it's getting heated. Trump and Xi are locked in a battle of egos, and neither wants to be the first to blink. On April 9th, 2025, Trump went on a fiery rant saying Xi needs to call me and negotiate. He's framing himself as the tough guy who'll make China back down, rallying his base with promises of American dominance. But Xi's not playing along. On April 11th, he gave a speech declaring, "China is not afraid," and hit back with those 300% tariffs. Chinese social media is eating it up. 70% of Weibo posts are cheering Xi's defiance, with some calling this a new Cold War. Trump's team keeps pushing the narrative that Xi's scared to negotiate, while China's state media paints Trump as a bully trying to destroy global trade. It's like watching two titans in a boxing ring, each waiting for the other to throw in the towel. The drama's only getting hotter. Trump's been doubling down, holding rallies where he calls Xi out by name, saying things like, he's not as tough as he thinks. Meanwhile, Xi's staying calm but firm, letting his actions, those 300% tariffs and rare earth bans, do the talking. Chinese media even revived old propaganda, comparing Xi to historical leaders who stood up to foreign powers. This personal clash is fueling the fire, and it's not just about pride. The U.S. is losing access to cheap goods and critical minerals, which could slow down industries from tech to defense. China's export-driven economy is taking a beating, with factories shutting down and unemployment ticking up. The question is, who can hold out longer? For Hedge and Haven viewers, this ego clash is a wake-up call. In the world of wealth, timing is everything. The longer this war drags on, the more volatile markets get. That's bad news for conservative investors, but a goldmine for those who know how to play the chaos. Let's talk about the winners and losers in this tariff war, because not everyone's feeling the pain. Hedge funds betting on U.S. industries are cleaning up. Some are shorting Chinese stocks, expecting them to tank as China's economy struggles. Others are going long on U.S. manufacturing, with bets on companies like Caterpillar and U.S. Steel paying off big. Analysts predict a 40% spike in domestic energy stocks by Q3 2025, as tariffs make American oil and gas more competitive. But if you're invested in companies tied to Chinese supply chains, like retailers or tech giants, you're in trouble. Walmart, for example, relies on China for 60% of its goods. With tariffs, their costs are skyrocketing, and they're already warning of price hikes. This is where the ultra-wealthy stand out. They see the chaos coming and adjust before it hits. For the average Hedge and Haven viewer, this volatility can feel overwhelming. You might be wondering, how do I protect my money when the world's falling apart? The good news is, you don't need to be a billionaire to think like one. The ultra-wealthy are already updating their strategies, and you can follow their lead. They're diversifying, hedging against volatility, and betting on safe havens. Gold, for example, has spiked 12% since February 2025 as investors flee risky markets. Offshore banking is booming with 20% more accounts opened in places like Singapore and Dubai. These are the moves that keep billionaires ahead, and we're going to break them down for you. So where's this tariff war headed? The data paints a grim picture. The IMF warned on April 22, 2025, that this trade war could shave 0.5% off global GDP, costing billions. In the US, the risk of a recession has jumped to 40%, driven by higher prices and market volatility. Every American household is facing an extra $1,300 in costs this year just because of tariffs. Global merchandise trade is expected to drop by 0.2%, hitting industries from tech to luxury hard. If this continues, we could be staring at a global recession by 2026. But there's a slim chance Trump and Xi could strike a deal. If Xi calls Trump and they negotiate, tariffs could ease and markets might stabilize. Don't hold your breath, though. Both leaders are dug in. Trump's base loves his tough stance, chanting, "Make America Great Again," at rallies. Xi's citizens see him as a national hero, with state media calling him China's unbreakable shield. A deal would mean someone losing face, and neither's willing to do that in 2025. Investors need to brace for impact, but you can come out ahead if you're smart. The ultra-wealthy are moving money into safe havens and pivoting to markets that benefit from this chaos. Let's get practical. How can you protect your wealth in this tariff war? Here are 3 strategies inspired by the 1%. First, invest in US-based ETFs. Tariffs are boosting American industries, and ETFs focused on manufacturing, energy, and steel are hot. The Vanguard Industrials ETF has seen 15% growth since January, low risk and high reward. Second, diversify with offshore accounts. Singapore and the Cayman Islands are seeing a 20% surge in new accounts because they offer stability and tax perks. If you're in the UK or Germany, a multi-currency account can hedge against currency swings. Third, bet on safe havens. Gold prices are up 12%, with another 10% jump predicted by Q4 2025. Start with gold ETFs or physical gold through trusted dealers. These strategies aren't just for billionaires. They're for anyone who wants to think like one. Want more tips like this? Drop a comment below and tell me what you're investing in right now. This tariff war is a wild ride, but you don't have to be a victim. Trump's 245% tariffs, Xi's 300% retaliation, crashing markets, pricier luxury goods, it's all changing the game for investors, entrepreneurs, and dreamers. Now you know the secrets, how hedge funds are profiting, where to invest, and how to stay ahead. If you found this video helpful, smash that like button, hit subscribe, and turn on the bell icon so you never miss our weekly dives into high finance, luxury real estate, and offshore banking. What do you think? Will Trump or Xi back down first? Or are we headed for a global recession? Drop your thoughts in the comments and let's get the conversation going. Check out our playlist for more on hedge funds, private jets, and the billionaire lifestyle. Thanks for watching, Hedge and Haven fam. Stay smart, stay wealthy, and I'll see you in the next one.